Hello, I'm Lenata Wenzel. I am going to discuss question 2 with you in tutorial letter 201, which is assignment 3. This has an A and a B part. The A part deals with the provisional tax payments of a company, and the B part is a discussion question where you need to apply the facts to the knowledge of your theory to answer the question. So let's first look at the A part, the provisional tax. So the A part is 10 marks, and the required tells us that there is also an A and a B part to this question. The A part asks of us to calculate the first and the second provisional tax payments for the 2014 year of assessment. Clearly state on which date the payment must be made. Remember, to give this information as well, it counts marks. So we need to do the first and the second provisional tax payments, and then the B part says for the first provisional tax payment for the 2014 year of assessment, what will be the basic amount in the 2013 assessment if the 2013 assessment was issued on a different date. So let's look at this later on. First focus on the A part. If we look at the information, it tells us that Sunshine Limited is not a small business corporation. This will impact the tax rate that we're going to use. So it's not a small business corporation, it's just going to be 28%. And its year of assessment ends on 31 March each year. Its records show the following. Then it tells us the tax years, which taxable income applies to everyone, and they tell us the date of the assessment. So the 2012 tax year was assessed on 4 April, the 2013 on 15 September, and the 2014 one has not yet been assessed, but there is an estimated taxable income that the company calculated as 1.7. So before we start with the calculation, I just want to first, on a timeline, show my dates and my values so that I can clearly see what I need to use. If we look at the 2012 year of assessment, the taxable income was assessed on 4 April 2013. Now my year of assessment is 2014, which is from 1 April to 31 March 2014. So 4 April 2013 is in my year of assessment round about here. The 2012 assessment, 2012 year was assessed. My 2013 was assessed on 15 September 2013, which is about there, and this is my 2013 year. Now while I'm indicating this 2-month period, you will know if you've gone through your study material that if an assessment was issued in the 2-month period before the provisional payment has to be made, then you can't use that assessment. It has to be older than the period, than 2 months before this assessment. So can you see 2 months before that, in this period, the 2013 year was assessed. And that will indicate to us which year of assessment we're going to use. So if we start with the question now, we're doing part A, and I want to do the first provisional payment first. While I'm busy with that, I'm now going to indicate, firstly, not to forget about it, when this payment needs to be made. Now, in my year of assessment, the first payment needs to be made 6 months before the end of the year of assessment. So the first payment is always 6 months, and in my case, with a March year end, it will be September. So my first provisional payment will be made on the 30th of September 2013. Just while we're busy with that, the second payment is made on year end, and then if there's a third payment, it will be made at the latest 6 months after year end. So the first one is 6 months before, second one on year end, third one 6 months after. Now if we look at the calculation of the first provisional payment, it's based on the basic amount. The basic amount is your last year of assessment, the taxable income on that year. So my basic amount, I have a year of assessment of 2013, or I have an assessment of 2013, but I can't use it, so I will use the 2012 assessment. And that's why I will use the 2012 assessment of 1.2. So this is my basic amount. Now, because my assessed amount is based on a 2012 year, and I'm doing my 2014 first assessment, I need to adjust this value to make sure that it's more appropriate for the 2014 year of assessment. So I need to increase it with 8% for every year between 2012 to 2014. So I'm going to use my basic amount of 1.2 million, multiplied by 8%, and I'm actually going to do this for 2 years, which is from 2012 to 2013, that's my first year, and from 2013 to 2014, that's my second year. And this gives me an increase that I need to add to my 1.2 million of 192,000. So this amount is the amount that I can base my first assessment on, my first provisional payment on. So this is now my basic amount. What you do with the basic amount is you apply the tax rate for a company, because it's not a small business corporation. So my tax liability will be 389,760. But remember, this is the total amount for 2014, and because we're doing the first provisional payment, only half of the amount needs to be paid on that date. So only half of the amount of that amount gives me 194,880. So this is the amount of my first provisional payment for the 2014 year of assessment. Now the question also asks for the second provisional tax payment. If I go to my second for 2014, I know this is now payable at year end, which is 31 March 2014. And remember to show that, because they specifically ask for it. If they don't ask for it, you don't need to give it. And the provisional payment, the second provisional payment at year end, is also linked to a basic amount, but because this company has taxable income of more than $1 million, you can't use the basic amount anymore. You have to use a seriously calculated estimate. If the taxable income of the company is less than $1 million, you could have used the basic amount, which is then your last year of assessment, the 2013 taxable income. But because this company has more than $1 million taxable income, you can use the estimated which they have given you. So my amount that I will calculate my provisional tax on is the estimated amount of 1784432. I don't need to make any adjustments to it like a 8% or anything, because I have seriously calculated this to be my final taxable income for the year. To that, I apply my 28% to calculate my tax liability, and that gives me amount of that amount. But remember, I'm not going to pay this whole amount. I've already paid part of the part of the tax payable for the 2014 year. So this amount I will deduct there as my first provisional payment. This will give me the amount that is payable now for my second provisional payment. And if I look at the required part again, they ask me to calculate the first and the second provisional tax payment and indicate on which date it was paid. So my part A has already been finished. I've dealt with the first and the second provisional payment, taking into account all the information that they have given me. Now let's look at the B part of question 2A. So if you look at the B part, it says, for the first provisional tax payment for the 2014 year of assessment, what will be the basic amount? So they're not asking me to calculate the provisional payment, they're only asking the basic amount if the 2013 assessment was issued on 15 June 2013. So this 2013 assessment, they're telling me it's not 15 September anymore. If it was 15 June, what would the amount then be? So on my timeline, I can indicate there that in my scenario B, my 2013 year was assessed on 15 June. In other words, when I do the first provisional payment on 30 September, this assessment is older than 2 months before the provisional payment, and that's why I can then use the 2013 assessment. So this is very clear that part B of the question says, because you can give me a description, because it was issued not in the 2-month period before the first provisional payment, I can use the 2013 year of assessment, which is the taxable income that they've given me for the 2013 year of assessment. And this then is my basic amount that I can use for my provisional payment. That's all that they ask of me, so I'm finished with part B of the question. So if we look at the second part of the question, question 2B, this is now a technical question where you have a scenario, they explain to you something about the client or the company, and you need to apply it according to the knowledge that you have. This is typically a theory question where you need to know specific things in order to answer this question. So this is where you need to know your study material very well. Let's just quickly read part B. I'm not going to look at all the information, but if we look at the required part, it says discuss. This is very important. So you need to write sentences to discuss the scenario with us. Discuss what procedures, if any, Majuba Pty Limited can follow to rectify the incorrect 2013 tax assessment. And this is an indication of how much you must write. So it's 5 marks. So then you go and read the question, look at the tax year, look at the type of client, look at what happened when, and this will give you an indication of how to apply the procedures that they're asking for. I am actually not going through the answer with you. You have the answer in front of you. But you can clearly see there that they start with a point where they say, firstly, they can appeal to the assessment. But in the meanwhile, they must also pay it. And then they go on that if this assessment was not regarded, then they go on appealing to the following courts and so on. So this is not a exam technique that I can tell you, follow these steps. You need to know the theory and then follow the discussion as you go along. So when you approach a theory question and a discussion question like this, firstly, make sure what issue is at hand. Are they asking for a general deduction or a general gross income question? In this case, it has to do with the administration procedures. So there you have to go back to your theory, recollect what was given in the study material, and then apply the scenario in the question to your theory. Remember, it's not enough just to give the theory, just to list the courts. You have to apply this scenario to your theory so that you can show that you have actually considered what this client needs to do. And then clearly write out the sentences. Just go in a methodical manner where you start at the start and end at the end. Don't try to think about everything and write them all together, because then you look confused and you will lose marks. So I hope this has helped you with the provisional tax question and with a theory type of question where you need to discuss.